Alright, folks, welcome back to Chapter 2. Stop thinking and start analyzing. And this chapter is specifically targeted at those who like to theorize, but they lack the practical skills of applying the concepts in theory. Let's start slow. And I hope you're not binge watching this like you would a Netflix series. Now, one thing I can't do is I can't force you to study this content properly. What I can do is offer the best explanation that there is of CRT, which is what CIC is. Right, and later in the CIC upper class, personalized teaching for a small group of people. But in CIC, I offer you a detailed explanation if you listen to it and you follow the instructions, because this is a manual. Right? Perhaps maybe later in a year or 2 or 3, I don't feel in the mood to teach. Even I sometimes go back to my videos because they're nothing more than manuals. It's not my opinion. It's not something I think is right. It is the objective facts gathered in one place. Right? It's an investigation I made, and after making this investigation, all the facts were gathered in one place in the form of CIC. And later the CIC upper class. Or any other educational video you have of me on YouTube, on Telegram, whatever it is. All my YouTube videos, or all my Telegram videos, all my mentorship videos, they are trading manuals. I can make them the best way possible, which is how they're done. And if by now you're saying, come on, just get to the point and tell me CRT, then no. Wait, shut up and listen. Right? I can't force you to watch these videos and take notes and apply them the correct way as you should. I can't deter you from simply binge watching, with the bag of chips, some popcorn. Let's watch what Dr. Romeo is saying right now. I can't deter you from that, and I can't force you to do the right thing. But what I can tell you is remind you that the best way to make the most value out of these videos is by watching them as you would a university lecture for an exam, not the way you would a Netflix series. Right, so that being said, the charts are divided into an X and Y axis. The Y axis showing us price, and the X axis showing us time. Excuse me. 90% of market participants or more, they never in their life as traders, they never look past the Y-axis. And due to the fact that the majority are always wrong, that alone tells me the importance of the X-axis, the importance of paying attention to time, not price. In fact, CRT was one of my 2 private models, which I never intended to release, ever. But now I have one of them. The other one is a model I use to trade only. It's my personal model, and don't ask me for it. I'm not going to share it. is a model where I use only time with no price. And we'll see more about that in a minute. So what's CRT? CRT stands for Candle Range Theory, which basically means every candle's a range, which will either be broken out of or truly or falsely. Means every range you see is either going to be turtle souped as so, or broken out of, close below lower prices. Right, close above higher prices. Wick above lower prices. And this takes us back to the age-old if-then concept, which is wick above. If they wick above, lower prices. If they wick below, higher prices. If they close above, higher prices. If they close below, lower prices. Our job is to hunt the highest, the highest probability candle range and look to trade them. Stop thinking and start analyzing. Now, the importance of time. Time is more important than price. And let's prove that, right? Because everyone goes and blabs on social media and puts pictures of old wise Greek gods as their profile pictures while being a teenager, right? If you know who I'm talking about. But everyone claims to know what time is. Everyone claims to have cracked the code of time and the algorithm. But the reality is as taught in lesson 1, 99% of these people are fraudsters. They have no idea what they're talking about. And listening to them does nothing more than damage your eyes and your brain even more and stray you away from profitability. The more you listen to these folks, the less likely it is that you succeed. And I've seen it many, many times. I've trained thousands and thousands and thousands of profitable traders, and the pattern I've seen with unprofitable traders is the fact that they keep jumping from one mentor to this guy to the third, to ICT, to DTFX, to the third and the fourth and the fifth, and then Romeo and someone else. I'm of the opinion that if you find CRT and turtle soup, if you truly find and understand and listen to me explaining CRT and turtle soup, and you still look for other things, or other people, or the strategies, or the explanations, then the chances of you succeeding are highly unlikely. Why? Because the sample size of people I have shows me that those who stick to one thing succeed. Time is more important than price. And it's nothing like these goofballs on Twitter act like they know what they're talking about. They don't. The demonstration that time is more important than price is as follows. Jason bought Bitcoin at the price of $10,000. Romeo bought Bitcoin at the price of $10,000. So they both bought at the same price. But the difference is Jason suffered a devastating 60% loss from his entry, while Romeo 4x'd, 5x'd, 6x'd his money. How? Because they both bought at the same time, at the same price, 10,000. The difference was the time they bought. So the price can be the same, but if the time is different, then you're either going to lose or you're going to win based on what time it is, not the price. And this can be demonstrated also on the lower time frames. Now we're going to go and run through the all the different levels of CRT, right? So the 4-hour, the daily, the weekly, and the monthly. 4-hour CRT. Every single daily candle is composed of 6 4-hour candles, right? Every single 4-hour candle, daily candle, is composed of 6 4-hour candles. All you have to do is find one valid CRT and trade it. And usually every single day, every single week, every single day you can have at least one 4-hour CRT. Now, this is a message only for the intermediate traders, right? For the beginners and the less advanced, you'll see something for you in the next chapters. And the highest probability of getting a CRT candle is going to be related to the 9 o'clock a.m. 4-hour candle. As you know, 159 is the division of the daily candle, which I made famous. Right, so 1 o'clock a.m. Again, what time is it? Which time zone are we following? The New York local time. Correct. If you said it, and if you didn't, then focus. Right, so 159, that's 6 4-hour candles a day. And each 4-hour candle can be imagined and seen as one daily candle due to thanks to the fractal nature of price and time. Each candle on every single time frame prints the same exact way, which means the monthly candle is the 4-hour candle printing slowly, and vice versa. The 1-hour candle is many daily candles printing fast, which is one of the best ways to practice is to trade as a beginner, to trade the higher time frame candle, but analyze the lower time frame candles at the same time to gain experience. Right? Because if you analyze 100 hourly candles, then you've gained the experience of someone who's analyzed 100 daily candles without analyzing the daily candles. Now think about that. Think about that for a second. Think about the fact that you're hacking time. Basically, you're getting more experience than someone who's been in the market 10, 20, 30 times more than you have, 30 times longer than you have. Excuse me. And this information, only knowing this information puts you at an advantage, because a supply and demand trader, an Elliott wave trader, a harmonics trader, a market structure trader, an ICT pattern trader even, they don't have access to this information. They can't take advantage of analyzing and gaining a lot of experience in a short amount of time, analyzing the lower time frame candles, treating them as if they were high time frame candles. And for the mental health of you, CIC member and watcher in the future, if you're watching this later down the road, 10, 20 years from now, for your mental health's sake, never go below the 4-hour time frame. Again, the 9-hour, it's a FOREX chart, right? So 159. the 9-hour candle is this one. And what I'm looking for is for it to be a smooth, easy, one-sided candle. Right? That's why the highest probability candle is the 9 o'clock a.m. New York time 4-hour candle. At the 9 a.m. CRT model, the real 9 a.m. CRT model, not the Temu version, which has been spreading on social media. And now that I bring that up, I'm going to warn you from people who are more worried about their social media than they are about their bank account. And if you're watching right now and not focusing, then focus. I'm warning you about people who you'll see on Twitter and YouTube and Telegram. They will come. They are more worried about their social media statistics than they are about their bank accounts. They will chase clout using the name CRT. They will claim to be experts. They will present to you with different drawings. And they'll draw all sorts of theories and mostly, of course, watered down versions of my words and my teachings. And they will achieve successfully fooling those of you who are looking for a quick way out. I'm warning you against them. If they come and tell you that they're going to come simplify CRT is already simplified. And anyone who comes to you claiming that they know CRT, or they can teach CRT better than I can, or any of that nonsense, is a straight up liar. And they will do nothing more than hinder your performance, so avoid them. This is already me summarizing and making it super simple. Right? And this entire year, 2025, I've already told you I'm going to dedicate it to you, my students, right? To make sure you understand, each of you understands, as far as I can do, of course, because you're a lot. But whether it's through CIC, whether it's through the CIC upper class, you will all get an adequate education, an extremely high level education, for free, and in CIC, and of course the most intensive in the upper class, right? But the point of this mini rant is to warn you against CRT grifters and merchants who come to you with their hindsight charts. They come to you with their mysterious tone, which is basically copying me word for word. They come to you with their intention to either gain followers or open another cheap course or whatever. Avoid them at all costs and stay away from them. They'll do nothing. They'll do you more harm than good. Right? And you'll see the internet stuffed with them. And I have nothing to do with any of them. Now, there's a caveat. If they credit me for the work and you see them doing stuff I do and say, so they're basically copying my words and reminding you of my words, then sure, they're good. But if they bring new stuff up, if they invent, quote unquote, which is just bullshit, if they invent, and I say it lightly, new concepts, and you see them bringing up new CRT intricacies and details, then they're full of shit. CRT didn't exist a couple months back, right? Until I decided to reveal it to the world. Anything anyone knows about CRT is only what I've taught. I'll say that once again. For those who went to sleep, focus. Anything anyone knows about CRT is what I've chosen for them to know. And anyone who adds anything else, which I haven't, or acts like they know something I don't, which is even more absurd, then their work is rejected and you are ordered to abandon them completely. Right? So, back to the 9 a.m. CRT model, the real one. So at 8:45, you're going to mark the landscape. What does this mean? This means you're going to go and see what the daily time frame candle is likely to expand towards, up or down. And you're going to mark a pre-9 o'clock high or low. And you're going to mark the 9 o'clock open. Right, those three factors, which are the three components of a high quality trade. And then at 9 o'clock, you wait for a high or low to be taken, turtle soup, and you wait for the formation of a model number 1, and you ride the wave. It's that simple. With, of course, an SMT forming between the two asset classes. Right, so it's that simple. No complications, no need for additions or innovations. All innovations are rejected. And they're designed to distract you and hinder your performance, no matter how juicy and enticing they make them look. Alright, so the summary of the 9 a.m. CRT model is at 8:45, mark the landscape, which means the higher time frame candle, a lower time frame liquidity pool, and the 9 a.m. open. You then watch. A common mistake made will be trying to force a trade as soon as 9 o'clock happens. No, wait for it to pan out. Wait to see what the market makers do, and then act. Always remember that we're nothing more than fleas on a dog's back, going for a ride. Alright, so we're watching. We're not pattern trading CRT. Right? We don't care about the pattern. We're trying to identify what the market makers want to do next. Next up, we have the daily CRT. Most famously, of course, in the week we have 5 different daily candles printing. Every single week, there's at least one daily CRT. Every single week. Which is a reversal CRT, by the way. Right? Because every candle is CRT by nature. Either broken out of or turtle souped. Right, but every single week you're going to find one of these. And notice how the 4-hour candle and the daily candle as well, they have the same aspect. So they all look the same. So whether you trade the 4-hour candle, it looks the same from the higher time frame, lower time frame. Daily candle, the exact same thing you see. Higher time frame, lower time frame. The same exact shapes and sizes. And I've done the same with the weekly. Higher, lower. And the purpose is to familiarize yourself with how the transition from a higher time frame CRT looks like on the lower time frame. Same with monthly. They all look the same. And this was done on purpose by me. This illustration of how they all look the same was done on purpose to demonstrate the fractal nature of price. So the monthly candle is nothing more than a slower 4-hour candle. Right. Back to the daily CRT. The most famous model is the Monday CRT model. In summary, candle number 1, Monday, accumulation. Candle number 2, Tuesday, higher low of the week. As we know, Monday, Tuesday, Wednesday have an 81% chance to form the high or low of the week, with Thursday and Friday forming the opposing end of the range. Right, which is why it's interesting for us, and it's in our best interest to go and look for a trade to form with a range and model number 1 on Monday, Tuesday, Wednesday. To go even further, Tuesday, Tuesday has an extremely high chance of forming the high or all of the week. Right, so to narrow down the probabilities even more, you go from Monday, Tuesday, Wednesday to only Tuesday. So Tuesday is a special day. It's usually a rough day. It's usually a day which stops out a lot of beginner traders. So here's what the week looks like. Right? Ignore this. Just listen and imagine the weekly candle playing out in real time. Monday is usually a volatile up and down day, right? So it's large retracements, large movements, large sharp declines or rallies. And then you have Tuesday as a consolidation, goes up and down and stops you out. And then Wednesday is an easy day to trade. Right? Monday accumulation, manipulation, distribution. Again, this is a visualization of liquidity pools. So the market makers use Monday to set the sentiment for the week. They then go on Tuesday to upset the positions created during Monday, a timed range, and then on Wednesday they go and distribute back to the old high. Right, so on Monday, if you want to trade the Monday CRT model, then on Monday, as a beginner Monday model trader, and there are methods, and I know I lost some of you, but if you're still focusing, then good job. There are ways to trade all 3 candles. I can trade, for example, this candle down with whatever happens in between, and this candle, and this candle, and this candle. That's me. I have the ability to trade every single candle on the chart. But I don't. Why? To reinforce selectivity. You want to go and select the best setups. You don't just go and randomly enter any trade you see. Because what that does is breed bad habits. Right? You want to be super selective with your setups. And the best way to do that is by timing your setups, which is another topic which we'll go into later. Now on Monday, do nothing. Simply mark the landscape again. Remember? What do I mean by mark the landscape? Mark the weekly candle's potential shape. Mark a high or low. And then you mark the weekly open time. And the daily candle trading's open time as well. Opening time. You then wait for Tuesday to hit an old high low which is the Monday higher low, and then you look for a 4-hour model number 1, and you ride the wave if it's a weekly trade, or you look for a 1-hour model number 1 and you ride the wave. Next up we have the weekly candle, and notice how they all look the same. That's the beauty of the fractal nature of price. They all look the same. The only difference is the speed they print at, and of course the number of pips they offer. Next we have the weekly CRT and the monthly CRT, and the way to link these candles is with lower time frame model number 1 is monthly CRT, daily model number 1, weekly CRT, 4-hour model number 1, daily CRT, 1-hour model number 1, 4-hour CRT, 15-minute model number 1.